So can we still see more weakness, right, in the Singapore telco sector, right? We're looking at companies like Singtel and Starhub. So just about a month back, I did a video on Singtel, all right, Singapore Telecom, and it was then trading at about 2.29. Let me just pull out the image right over here, about 2.29. Then more than a month back on the 20th of August, and I mentioned that is it time to buy Singtel? I mean, why you need to probably think twice, right? You can check out a video about a month back, and the thing is, over the past 1 month, right, we have seen more weakness, right, coming out in this company, all right, Singtel, and also another company called Starhub. So a lot of people have been asking me, Joey, is it time to buy this Singapore telco companies? I mean, is it time for a reversal? Can we still see more downside? Hey guys, Joey here, top tier advisor in Phillip Securities and Chief Trainer at Trading Impulse. Right? So in today's video, as of the 25th of September 2020, right, we'll go through again, all right, what is happening for Singtel and Starhub and the whole sector as a whole. I mean, why are we seeing weakness? Why are sellers, coming in again to kind of take prices down? So I mentioned in the previous video that, for the whole entire sector, we're seeing in terms of the revenues, profit margins, they're all being hit because there are more than like 10 over telco companies. I think like we have like Circus Live, TPG, and all that. You can just do a quick Google. And right now, there's a lot of what we call SIM-only plans, right? As I mentioned a few years back, we had like contract plans. We have to like contract for 2 years, and they kind of like tie us up with like new phones and all that. But right now, it's like there's no contract, SIM-only plans, and that's why many of these companies like Singtel and Starhub, they have to follow suit as well, join the competition and offer what we call SIM-only plans. And that's why revenue is hit, the net profit margins are hit as well, and it's very tight margins due to these plans that's out and a lot of competition in the market, right? So right now, let's dive into the charts, right, for Singtel and Starhub to see where we are now and if there can still be more weakness, or you want to be careful if you want to think about buying, or maybe you can think about how you can ride the downside, all right, by probably taking like short positions. This will be covered right now. So this is Singtel right over here as of the 25th of September 2020. So this is about a month back. I think we're somewhere around here. It was then trading about 229, 230, and there were some downside targets that were drawn to about 220 and maybe even $2, right? So you can see that, over the past few weeks, we have seen weakness coming back still for Singtel. Look at this right over here. We are pretty much still trading downwards, all right, downwards. You can see forming lower lows, right? Not a good sign in terms of the trend, all right? In terms of the downtrend, it still seems pretty much intact. And look at this, right? The 20 days moving average, which is just this green line right over here, is still sloping downwards gently, and prices, all right, have been holding below this 20 days moving average or this all right, and forming lower lows. And in fact, over the past few days, we have kind of broken below that $2.20 support. So I mentioned about this support just in the previous video, right? This support, I would say, is a good support. We might see a bit of bargain hunting, and yes, indeed, we did rebound a bit from there. But what happens is we broke this support level, right? We kind of rebounded from this level in March, just when after COVID-19 hit, we kind of rebounded from this level. So this 220 would be a good support, but it seems like it is not holding as well, and we broke that 220 support. Over the past 2 weeks, we have kind of alerted clients to this company as well, right, in terms of more downside. All right, when it broke that 220, that's where another alert was sent out. It would be a good trigger for more weakness. All right, so we're currently trading about $2.12, right, and you can see that it's quite a bearish move back down below that 220 support level, and we might see, let me just draw some downside targets, right, below 220. I would say that the downtrend is pretty much intact. I think we might rebound a bit, but I would say anything below 220, sellers might come out again, all right, to take it down. And right now, probably a bit of support about $2.10, but if that gives way as well, yes, it's pretty much back to the psychological $2 level. Just let me reiterate the target again, as I've drawn in the previous video, right, probably about $2, right? In terms of the longer term trend, right, I think I mentioned in the previous video as well, you can see that it's pretty much in a downtrend. I think since like breaking that $3 to $3.10 just in February this year, right over here, you can see we kind of broke down this $3 to $3.10 support. It's not a good sign already, right? And look at the moving average. The red line is below the blue line, 100 days moving average below the 200 days moving average, and both of them are pretty much pointing down. Alright, so mid to long term trend, I would say still negative. Alright, so this will be our downside targets in the short term to about $2. Just want to be careful because I think if that $2 were to be broken, we might even revise our targets lower. So I probably would not want to think about like buying encounters like this in a downtrend. I mean, if you want to buy and accumulate on dips, you can probably think about doing it probably near $2, but just make sure you have a plan, because if that $2 were to break down, that's where you can see more selling. So you want to have a plan to get out and stop loss. You don't want to just be holding it all the way down. All right, but probably think about how you can take like short positions using CFD, contract for difference, to kind of ride the downside, profit from the downside. I mean, those who have shorted like somewhere at 250 and 240 just a few months back, you're probably sitting on gains. You can probably think about buying on the cheap. All right, not to like accumulate on dips and buy for a rebound, but more like buying to take profit, right? So that's the difference when you're like taking short positions. You sell, it comes down, you buy back, so you're taking like short positions to ride the downside and profit from the weakness. Okay, so this is Singtel right over here, a bit more negative, bearish, I would say, below that 220 immediate resistance right now. So before I move on, be sure to give me a thumbs up, right? Give me a like, so that it will definitely help the channel out, and thank you so much for doing this. So what about Starhub, also another Singapore listed telco? All right, so I did not cover Starhub, but let me just zoom in on Starhub to see where we are right now. And we are currently trading at about $1.18, 1.18 right over here. So looking at the chart, you can see that it's pretty much a downtrend. Look at the moving average in the mid to long term. You can see this red line is pointing down. The blue line is also sloping down as well, and pretty much in the mid to long term, I would say it's down for now. All right, and what happens was over the past, I would say 1 to 2 months, somewhere in July, we kind of broke this pretty good support at about $1.25. Look at this, we kind of like supported above it. We broke down, came back up, but it seems like we have broken this 125 support level, and since like July, August, we have been kept below this $1.25 support turn resistance. Let me just change this line right away, 125, to be a resistance level. All right away from green to red, that will be a resistance level. And yeah, I would say right now, resistance wise, 125 and maybe even 120, because we've kind of broken the 120 over the past 2 to 3 weeks as well. Look at this right over here, 120. Right, so we might see a bit more weakness, I would say, below that 120 level. All right, and probably towards that $1.10, right? 110 would be key. All right, look at this. 110 was where we rebounded in March. All right, just after COVID hit, we kind of rebounded from there, and then quite a good rebound, I would say. So 110 would be the level. Just want to take note of. We might potentially hit to there as long as we stay below that 120. Same thing is about 120. 120 resistance. If we stay below 120, that's where we might see a bit more weakness coming to a 110. Of course, if that $1.10 immediate support level were to be broken, we might even reiterate our targets downwards, because this is pretty much a downtrend, as I mentioned, in the mid to long term, right? If we break that 110, we might potentially hit towards that $1 psychological level, right? So that could be the downside for Starhub, as I mentioned, because the trend still seems down, and the same thing like Singtel, they're pretty much in a sector whereby there's lots of competitions, margins are hit, and that's where in terms of fundamentals wise, they're not doing that well. Technical wise, we might see more selling pressure coming in before potentially some bargain hunting again. But right now, I'm still weak for Starhub below that 120 resistance level, whereby you can think about taking CFD short positions to ride the weakness. So there we have it. We have covered Singtel and Starhub. I hope you've enjoyed this video. If you have, remember to smash the subscribe button, right? Hit the bell and the notification so that you will be alerted when any new videos like this comes out, and you can act on them fast, right? So Joey here, thank you so much for watching. I'll see you in the next video.